Good morning, everybody. Hey, welcome to Friday, February 26th. It's the last Friday of February. This is the last closing day of the market for February. I'll talk to you again on March 1st. So interesting. Yesterday was not a good day. Let's just put it lightly. And so we'll talk about that today. What caused that? What we're looking at? Um, and we'll go from there. I'm hoping that we'll see some green ink this morning, but right now it's a little bit of a mixed bag. So we'll talk about that and more when Dave joins us up next. But before we do, let me remind you, folks, that there's only one thing that we can control within the marketplace, and that's the amount of risk that you have in your portfolio. And if you don't know what your risk number is, I know I keep pounding this in, but if it's really important. If you don't know what your risk number is, it can be devastating in times like this when the markets start to collapse. Give me a call at 863-382-0037 to determine what your risk number is. Hey, I'm looking forward to talking to Dave, and that is coming up next.
Point seven. There are. Which when Phillip, Statler, and I get on the phone, we try to figure out what in heck is causing the movements. And, well, we got engrossed in trying to figure out what in heck is causing the movements on the markets. And that's what we're about to do now, see what's happening with your 401k and your IRA up on Wall Street. Boy, what a bloodbath yesterday. Let's talk to Phillip now and see what his take is on the day. Phillip, how are you this morning?
You know, I'm hoping that I'm going to be better than what I was yesterday, watching the markets just fall precipitously throughout the day.
I was hoping
maybe that last hour it would, bounce up, but no such luck.
No such luck. There was a little at the end, but we were down as much as 600 points on the Dow about an hour before the market closed. We ended up down 560 points on the Dow yesterday, 559.85. That's a 1.75%, and that drop was dwarfed by the NASDAQ. It was down 3.5+%, down 478 points and change yesterday. Now, S&P was kind of a little bit worse than the Dow, and not as bad as the NASDAQ, down almost 2.5%. It was just a bloodbath, and just scanning through it this morning, trying to figure out what it was, you and I, best we can do is it was just the interest rates making substantial changes, weren't they?
Yeah, it is. I mean, and it was substantial too. I mean, Dave, we saw. I mean, at least that's what the headlines were showing, is that we'd seen as much as almost a 40 basis point jump in the 10-year Treasury, and that's just over a week or two period of time, that's a big jump. But to all happen in one day, I mean, obviously we came off of that before the end of the day, but still, that was a huge jump in the yield of the 10-year Treasury, and so. The one thing that's going to push the NASDAQ, I mean, obviously we got one more day. Hopefully it'll end up positive today, but for the week now, it's down almost 5.4%. So we need a really good day today to kind of buoy that thing back up.
You know, I've been kind of having this pet theory now for, a few years, as a matter of fact, that given the size of the indexes, the gross numbers at the top end of the indexes, we're almost getting to the point where 5% changes get responded to like that traditional definition of a 10% correction. So maybe the computers that all went into a case of the hissies and upchucked sell orders yesterday on the interest rate bumps might be upchucking buy orders today after a 5% weekly drop in the NASDAQ.
That would be nice to see. I will tell you, that would definitely make the end of the week a great end of the week.
It would be nice, but boy, swings got wild all of a sudden, which just kind of underscores the notion that volatility has not come to a close because, boy, there were a few day traders that took a real bath yesterday. Starting out the morning, we start out with some federal data dump stuff, and pretty much it's all good news. Personal consumption expenditures inflation measure. It's kind of a new measurement the government's been pumping out. Pretty much on target and a little bit above it. They were expecting about a 0.2% increase in personal consumption expenditures, and it was up 0.3%. That still keeps us in an inflation rate around 1.5%. Beating the number and keeping inflation under control got to feel relatively good for traders.
Yeah, I think so. I mean, I think that's it's back to where it was the month before. So that means it did not change from January or from December to January. So that was, I think that's probably good news when we look at it from that point, and it's a tenth of a percent better than expected. So
Yep.
I think that's good.
And then personal income and expenditure and personal income and personal expenditures are looking relatively good too. A 10% increase in personal income in the country month over month. And that, again, was more than the market expected. So once again, we're giving the market some good news to chew on this morning to start out with.
It is. And it's really good news when you compare it to the month before. Because the month before, personal income was only up 0.6%. And now to be up 10%, I mean, that's a huge number. That's a huge increase month over month. And it was, I mean, obviously the analysts were pretty much expecting that to be pretty close to that. And consumer spending is in line with what the expectation was too. And it's a pretty good increase over the prior month also. So I think both those numbers, along with the core inflation number, I can't find anything bad in those numbers, Dave. And so I think maybe that's what's helping push the futures forward a little bit today in green ink.
Well, you add to the non-monetary news that's out there. I mean, it's one of those days in which, on paper, everything should be coming up roses. The market wants a stimulus. Things are saying, in conventional wisdom, that Congress could get the stimulus package passed on that what do they call it? Reconciliation mode. Get the stimulus package passed today, and the rumor has it anyway that the FDA could actually issue its emergency authorization for the Johnson & Johnson vaccine today, too. I mean, you look at all the headlines on paper this morning in a vacuum, this should be a monster up day on Wall Street just in terms of optimistic reactions.
It definitely looks good, Dave, on paper, but you know what could happen when you look at things on paper. I hope that is what follows through. There was some good things. I mean, if the House passes the stimulus package today, because of procedurals, they couldn't add in the $15 federal minimum wage, which I think is good for small businesses. So that will have to be handled later. And so then the Senate now will get this bill next week, and hopefully they can get that passed, and then we can get that thing funded and taken care of, as well as, like you said, the vaccine. That'll be 3 vaccines, and from what I saw yesterday, they've got Johnson & Johnson's got like millions. Like I think I saw like 60 million, something like that, vaccines ready to ship right now.
Absolutely. I keep reading in the news, there's always this codicil comes in. Well, it's nowhere near as effective as the Pfizer and the Moderna vaccine. True, but its effectiveness rate is comparable to the flu vaccine that everybody generally takes, or a running ton of us do each year. It's in that effectiveness range, and at the very least what it'll do is it'll cut things back, and it is 100% effective at keeping people out of the hospital. So there's a lot of good things that are happening on the vaccine front. With a 1-dose vaccine in the offing, the stimulus package, less the one thing that has business people worried about, that minimum wage increase, plus the economic numbers, boy, if the interest rates could stabilize a little bit, there really wouldn't be a reason for traders not to be happy this morning.
No, there really wouldn't be. And I'm hoping we can end Friday in the month of February on a really good positive note.
We kind of need it at this point in time. Any companies reporting news this morning?
Oh, a bunch of them.
Let's hear a few.
Hey, we got Foot Locker. They're the shoe retailer. They're getting beat up this morning. Their revenue came in below forecast. Their earnings missed. They beat earnings by 20 cents a share. But they're having some issues on same store sales, where unexpectedly had a decline. They're trading down about a little over 5.5% this morning. Let's look at a couple things that are reporting their first quarter, being public companies. And one of them is Airbnb. Airbnb reported a loss in the first quarter. I couldn't really find the exact numbers there. Revenues did better than expected, given the pandemic. And so they're trading up today, 4.3%. Now they got beat up yesterday. They're down like 9% yesterday, but up 4.3% this morning. Another first time, I think it's a first time reporter. It's fourth quarter, I'm sorry. But DoorDash is a relatively new publicly traded company.
Hmm.
They reported better than expected, really better than expected. They expected to, I'm sorry, they I'll get my notes right here in a second, but they lost more than expected. Um,
Hmm.
they had better expected sales than what everybody was looking for, but they were supposed to lose like 75 cents a share. They lost $2.67 a share.
Holy crud.
Yeah, that was can you say big miss? Um,
Yeah.
they were down. Right now they're down 10% before the market gets going. So that was yeah, that was pretty devastating for them. We
We're
have
not being real charitable to the disappointing stocks, are we?
no, we're really not. We did see a couple. Salesforce, that's a household name at least for businesses. They earned $1.04 a share, which is a lot better than the 75 cents they were expected. Revenue beat forecast as well.
So
However,
why are they falling?
so they gave weaker than expected full year profit guidance. Then there is also some concern among analysts, because they're going to do this big acquisition of Slack, the the workforce messaging platform. So there's some concern about how that's going to affect them. So that's why they're trading down 1.5% this morning.
That's better than my delayed quote had him. I had him at the top of my big loser list for a while.
So you want a big winner? I got you a
Yeah,
big winner. How
I
about
need some.
Rocket Company, the parent of Quicken Loans and some other financial services? They had a pretty big beat on earnings per share, revenue top forecast. They actually completed a record year of mortgage volumes, and they're going to issue a special dividend of $1.11 per share.
Wow.
Um, yeah, so they are trading up this morning, getting close to 20%, 19.85% right now.
Well, I'm glad somebody had some good news this morning, as you were not Mary Sunshine on the reports this morning. I want you to know.
It's been a rough day today.
I believe that. Resetting the table, bloodbath yesterday. Enough said. In theory, things should be looking better this morning, I'd hope, 45 minutes early. Are we doing that, Phillip?
It's a mixed bag, but it's definitely better than what it was a while back. So we've got the Dow 30 is down about 0.2% right now. The S&P 500 is up 0.25%, and we are getting some good news from the Nasdaq, at least at the opening. They're up about 0.8% right now. So hopefully that can carry through to the opening at 9:30. On the commodities front, everything is looking really, really red. So we've got silver down a little over 3%. Gold is down 0.8%, and crude oil, bright spot of the day, down 1.75% to $62.42 a barrel.
Oh, gosh, thank heavens for some good big favors, huh?
Exactly.
World markets pretty much followed our lead. The Asian Rim was up 3% and more off this morning at their close. Europe is still off, not as bad as Asia was, but some of those indexes are bumping the 2% mark as well. And I should mention that the interest rates are looking like they're finally trending downward. And let's see. Well, I'm still showing them up, but you told me they're trending downward on your instant tick, aren't they?
Yeah, they were. They were trading down just a tad. They're like 1.46% yield right now on the 10-year.
Well, that's a little bit better than the skyrocketing we had yesterday, that's for sure. Phillip, this is one of those days in which it's just kind of a tale of the tape. A computer on Wall Street gets a bad case of sushi and upchucks sell orders, and your retirement portfolio goes south unless you got the right controls on it. How do I find you to get a handle on the risk in my portfolio?
Dave, that's where volatility and risk play a big role. And if you don't know what the risk is in your portfolio, that can be dangerous when we see things like yesterday. Give me a call at 863-382-0037. Check out our website, statlerfinancial.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And back here again on Monday morning, hopefully with some good news the way today ends. Phillip, thank you so much. You have a wonderful weekend, all right?
All right, man, you too, and I'll talk to you in March.
Oh, geez, that's right. Next month. February has gone by way too fast. Be well, my friend.
All right,
It's
thanks.
105.7 Light FM and Statler Financial Services, Phillip Statler.
If you owe 26 point.
Hey, folks, again, I want to thank you for joining us. Welcome to the end of February. I hope your year is doing well. I will talk to you again in March. Have a great weekend, and we'll see you soon. Bye now.